folks, it's Jim here from FX Charts. It is Thursday the 4th of April. It's been a day of consolidation and partial recovery in risk sentiment really after the positive headlines coming out of the US-Chinese trade talks. Word has it that they're 90% of the way there. We'll wait and see on that, but the finer points have yet to be put in place. But it's underpinning risk sentiment right now. Stocks are a little higher, and the base metals, copper and iron ore, have both made decent gains, and they look like they could be headed higher. So things are looking slightly more positive. Yields were also a little bit higher today, and in particular the German 10-year Bund moved back into positive territory, only just at 0.006%, but after having been in a negative mood for the last week, and this has helped underpin the euro a little, and technically the euro looks as though it may have a little further to rise, although the market now seems to like to be on hold ahead of tomorrow's US employment data, with very little on the calendar today. We'll go and have a look at the euro chart and see what it's got to say. Okay, so this is a 1 hour euro chart, and it has risen off these lows below. It got down below 112 yesterday briefly, but it's squeezed a little bit higher. It's still under the 200 hour moving average, and it's pinned in really above the 100 and the 55 hours. So I don't really expect to see an awful lot today, but the hourly charts are a little bit toppish, so we might see a bit of a drift back down towards 112. But if we do that, the 4 hourlies are well underpinned, so I don't think we go much under 112 today. The dailies are pretty neutral, as you can see. We've come down and we're sitting on this support down here. I think that will probably pin it today on the downside. So I'd be looking to buy below 112, but not looking for too much on the upside. I think if we do see it much above 112.5 today, we're going to be very lucky. We've got this 200 hour moving average here. If we do break above 112.5, well, we can probably head to sort of 113.25. But I don't really see it up there. The Aussie is quite interesting. It was trading a fair bit lower yesterday. This is a daily chart. We'll go back to the shorter term. It was trading a fair bit lower towards its recent lows, ahead of the retail sales yesterday, and then that Chinese headline that came out suggesting that the trade talks are heading in the right direction. So we've risen up to about 71.30, which is decent resistance. As you can see, we're yet to break above this trend line here. If we do, then we can go up to 71.50 towards this top here, possibly even up towards 71.70. In the absence of any major data, I don't really think we're going to do too much. The 4 hourly charts are probably very, very slightly positive. So while risk sentiment remains positive, then I think the Aussie possibly remains firmish. But realistically, a range trade between sort of 70-80, which I doubt we'll see today, but 70-80, 70-90, somewhere around there, and 71.50 on the top side should more or less cover it. The same really applies for most of the currencies. I don't think anything's really going anywhere. Dollar yen, if we look at the dollar yen chart, it's sitting very close to this 200-day moving average, underpinned a bit lower by the 100 moving average. If we were to make a break to the top side, well, the 200-week moving average sits here just above 112. So I don't really think we're going to see too much, and once again we're underpinned on the downside by the 100-week moving average at 110.80. So ahead of the non-farm payrolls, pretty much sideways. I think that applies really to everything. The only thing that I do quite like at the moment is the oil market. Now that's broken above the 200-day moving average at 61.50. That's what we were looking for last week. Now we've broken above here, and we're ranging now between 62 and 63. I'm really looking for a move now towards the 61.8% level at 63.5, And if we go beyond there, then I think there's a fair bit of upsides towards sort of 68, 70, somewhere around there. So I prefer to be long. The daily indicators are looking positive, as are the weeklies. So I do prefer to be long, looking for the move towards this 63.5 level here. Stop losses should now be kept below the 200-day moving average at 61.5 or thereabouts. So that's about it for today. I think we're going to be in a pretty range-bound session, and really we're waiting for the non-farm payrolls tomorrow. That's about it. Have a good one. Talk to you later. Bye.